Hello everyone and welcome to Infonox Market Insights with me, Richard Perry, analysing markets for Infonox on Friday the 3rd of September. Now it's the jobs report today, non-farm payrolls, and it could be a crucial report considering we've got the June FOMC meeting just round the corner. Now markets are in their traditional consolidation in front of this report because how it comes out today could well be defining the content of that June FOMC. Markets have been considering the fact that the tapering of asset purchases could be close throughout the summer. However, the speech by Fed Chair Powell at Jackson Hole really poured cold water on that. But if there is a really strong jobs report today, that could be back on the table for October. So it's a really important number that markets will be looking out for today. However, in front of this jobs report, the dollar has been weakening, risk appetite has been positive. Dollar has been weakening across Forex major pairs, and you've seen the likes of Euro dollar and Aussie dollar rallying hard in front of this jobs report. We've also seen equity markets pushing strongly higher once more as well. So really important that how this jobs report comes out today could be, again, a deciding factor for near-term trends and obviously how that FOMC decision comes out today. Now, aside from the jobs report, we're also looking out for the ISM data, the services PMI comes out later today, and again it's likely to be coming slightly lower. However, what we did see was the Chinese services Asian services PMI come in well under expectations, and that has hit sentiment a little bit overnight, but certainly how the US ISM data comes out as well will paint more of a picture as to how the US economy is developing, so watch out for that later today. So with regards to the charts we're looking out for today, we're looking out for Euro dollar, which has been rallying hard above the key resistance of 118, now looking at 119. What is the technical outlook there? And also we're looking out for the Aussie dollar, rallying towards a key level of resistance in this risk recovery. And the technical implications of that could be important too. And finally, we're looking out for the gold chart. Well, gold has been moving a little bit sideways in consolidation, but I think that comes ahead of this payrolls report. So how the payrolls report today could be trend defining once more. Let's have a look at these charts. And onto the Infonox MT5 platform now, and just starting off with Euro dollar, we can see that the big downtrend that we had throughout the summer has now been broken as this euro has rallied against a weakening dollar, and that rally has accelerated in recent days. Look, the candlesticks are getting more significantly strong as the market pushes towards the key level of resistance overhead at 119 big figure area, 118.95 to 119.10. And this is going to be the crucial test because you can see the improvement in the momentum indicators, and if you can get through 119 big figure on a closing basis, that really does open the upside once more towards 120. So this is a really key level of resistance overhead, but you can see the uptrend that's formed now. That uptrend comes in around 1820 at the moment, and any near-term corrective move, this is the 4-hour chart, any near-term corrective move, you could argue back towards that the 21 4-hour moving average, and look at the strong momentum on that 4-hour chart as well. So any unwinding move is a chance to buy, but a weak payrolls report I think is going to drive euro dollar higher today if that were to be the case. You can see the nice basis of support around 1830 area, 1840, and that is where you'd be looking at any sort of reaction lower intraday, I think, using that as a basis of support for the next leg higher. So looking at the Aussie, it's a sort of a similar picture, isn't it? This big downtrend channel has now been broken by strong recovery that we've seen in the last week or two, really has accelerated away in the last week since that Jackson Hole speech by Fed Chair Powell, and we can see the improvement in the momentum. The RSI has not been into the 60s for, let's go back, not been into the 60s. This is actually, well, this is a key level, isn't it? Look at that, where the rallies sort of tailed off in April and May. So a move into the 60s would be really key and really strong for recovery, and you can see that this is a really important moment with the resistance around that 74.25 area. You can break through that on a closing basis. That really does open 75.30 as the next level, and you can see the uptrend forming strongly, and we can see that uptrend again on the hourly chart, sorry, the 4-hour chart, 73.80 area on that, but it's a little bit stretched on the near-term RSI, so you could see a bit of a near-term unwind, but strong nonetheless, I think, on this recovery. So a weak payrolls report would definitely help this Aussie dollar rally go higher. And finally on gold, another recovery against a weakening dollar. It's a bit of a consolidation, actually, you could argue, in the past week, not really going too much further because a risk recovery tends to be seen as gold negative, but obviously the dollar suffering has helped to support gold. So two contrasting factors there, but certainly the gold recovery is starting to build, isn't it? And you can see if gold gets above that 60 area on the RSI, that would be suggesting that a recovery was really developing, and then you've got obviously a move through that 1833 level of resistance. If that was to be seen on a closing basis, that really would open the recovery. So really important moments here for gold. Initial support around the 1800 bucks area is building, and this is sort of bubbling up nicely, I think, for the payrolls report. Thank you for watching this video. I wish you good luck with your non-farm payrolls trading, everyone. Join me again next week, where we'll be looking ahead to 3 central banks and the impact that will have on the outlook. So I'll leave you with the Infonox support and resistance table, and I'll speak to you then. Thank you very much.